The market is a stage where countless players rush to perform, each believing that constant action leads to constant profit. Yet, history whispers a different truth. The real wealth is never in the frenzy of doing, but in the mastery of waiting. The market rewards not the worker, but the waiter. This paradox separates the seasoned trader from the restless gambler. Those who chase every flicker of price movement exhaust their capital and spirit, while those who learn to stand still when others move find themselves positioned for greatness when the time is right. In trading, the mind is often a greater adversary than the market itself. The urge to act is a powerful one. It gives the illusion of control. You feel productive, involved, even intelligent as you click the buttons, open the charts, make the trades. But activity and progress are not the same. A trader who trades every signal soon learns that the market doesn't pay for effort. It pays for timing. Waiting is not laziness. It's discipline disguised as stillness. It's the act of letting opportunity mature until it becomes undeniable. Every price movement is a whisper, a tease, an invitation to jump in. But the wise know that most movements are meaningless, just noise meant to lure the impatient. The market's great deception is that it appears to reward quickness, but in reality it punishes it. The flashes of profit gained from impulsive trades are nothing compared to the deep, lasting gains earned from patience. Every professional trader learns, sooner or later, that the biggest moves, the kind that make fortunes, come not from chasing, but from waiting for the right alignment of trend, volume, and sentiment. The crowd is restless. They can't bear to wait. They treat the market like a machine that must be fed constant input to produce output. But the market is more like a river. It flows at its own pace, and those who try to force it only get swept away. The waiter studies the current, watches how it bends, learns where it deepens, and only then sets his line in the water. The worker, by contrast, casts constantly, exhausting his patience and his resources. He ends his day tired and empty-handed, while the one who waited reels in the reward. There is a profound stillness in successful trading, a calm that comes from understanding that opportunity doesn't need to be chased. It needs to be recognized. The best traders spend most of their time doing nothing. They analyze, they observe, they prepare, then they wait. Days, sometimes weeks. And when the market finally confirms what they've been expecting, they act with precision, confidence, and conviction. One decisive move, backed by weeks of silence, can do more than 100 small trades ever could. Patience in trading is not passive. It's an active form of control. It means mastering the human instinct to do something. Anything. Just to feel in motion. The market plays on emotion, fear of missing out, fear of loss, fear of being wrong. The worker falls into these traps because he confuses motion with meaning. The waiter resists them, standing firm, letting others exhaust themselves in the noise. That calm detachment becomes his edge. The truth is, the market doesn't care how hard you work. It doesn't care how many trades you make, how long you've stared at the screen, or how much data you've analyzed. It only cares that you're in the right place at the right time, with the right mindset. The market pays not for effort, but for execution. And execution, in its purest form, is the result of patience, of watching, waiting, and striking only when the odds are stacked in your favor. In the world of trading, silence is often mistaken for weakness. The constant hum of price movements, the chatter of news, the endless stream of opinions, they all create an illusion that the more one speaks, the more one acts, the more successful one must be. But the truth lies in the quiet spaces between decisions. Silence is not a void, it is a position in itself. It's a stance of strength, awareness, and control. While others rush to fill the air with noise and their portfolios with trades, the wise trader understands that silence can be the most powerful move of all. To be silent in the market does not mean to be idle. It means to be listening, to the rhythm of price action, to the undertones of sentiment, to the story that unfolds between the lines of every chart. The silent trader is not disengaged, he is attuned. He waits not because he is uncertain, because he recognizes that the market often reveals its truth only in whispers. Every tick, every pause, every false breakout is a form of language. Only the one who knows how to listen without the distraction of noise can truly interpret what the market is saying. Most traders feel uncomfortable with silence because it exposes them to themselves. Without the distraction of constant trading, they are left face to face with their doubts, fears, and impulses. They crave motion, believing that doing something is better than doing nothing. But this impatience is what the market feeds on. Every rushed trade, every forced position, every reaction to a headline is a donation to those who understand that waiting and watching can be as strategic as buying or selling. Silence gives birth to clarity. In silence, patterns become visible that were hidden in the chaos of constant movement. It is in silence that one recognizes the difference between noise and signal, between reaction and opportunity. The market rewards those who can see clearly, and clarity requires stillness. It requires the discipline to step back, to breathe, to observe without bias. In the silence, emotions settle, and the mind becomes sharper. The impulsive trader acts first and thinks later. The silent trader thinks deeply and then acts once, decisively. There is a kind of composure that only comes from silence. It's the calm of the observer who knows that every market movement is temporary, every emotion fleeting. Silence allows a trader to rise above the panic of the crowd. When others are shouting in excitement or despair, the silent one remains grounded. He understands that the market's noise is designed to provoke reaction, to shake the weak hands and test the strong ones. By staying silent, he preserves his energy and focus for when it truly matters. Silence is a position because it creates space for judgment. It allows a trader to measure risk without pressure, to analyze trends without bias, to act from strategy instead of emotion. Every great trade begins with silence, with a period of observation and reflection before the move is made. Just as a hunter waits quietly for the perfect moment, the patient trader holds still, trusting that time will bring the right setup. The silence before the strike is not hesitation, it's preparation. In the end, silence is the invisible trade, the one the charts never show but the results always prove. It's the unspoken discipline that prevents overtrading, the unseen restraint that keeps capital intact, the hidden strength that allows clarity to lead over chaos. Those who learn to sit in silence without anxiety, who understand that not acting can sometimes be the most powerful action of all, rise above the constant noise of the market. For every decision that is made, there are 100 that are wisely left unmade. Silence is not absence, it's presence. The quiet conviction that patience, not noise, holds the real power in trading. Every trader enters the market with dreams of profit, yet most fall victim to the very thing they fail to control, their own impulses. The charts, the news, the flashing prices, all of them play upon human emotion like strings on an instrument. Impulse is the enemy of fortune because it blinds reason, poisons patience, and turns discipline into chaos. The difference between the successful trader and the struggling one is rarely knowledge. It's control. Control over the powerful urge to act when silence would serve better, to chase when waiting would win, to react when reflection would protect. Impulse disguises itself as intuition. It feels sharp, immediate, convincing. In the heat of the moment, a trader believes he sees something others don't. A sudden move, a perfect entry, a quick profit waiting to be captured. But the market has no mercy for those who act without confirmation. It rewards the paired, not the emotional. Every impulsive decision is a gamble, not a strategy. It might bring temporary satisfaction, a fleeting victory that feeds ego, but it always extracts a price. Over time, those small, emotional trades accumulate into big, irreversible losses. The market thrives on emotion. It tempts traders with greed and terrifies them with fear. It knows that the average person cannot stand uncertainty, cannot bear to miss out, cannot resist the urge to do something. Impulse trading is not about market logic. It's about human weakness. Each click driven by impatience or excitement gives the market another edge over you. The professional understands this and builds walls around his decision-making process. He uses rules, confirmations, and time not to limit freedom, but to protect it from emotion. Impulse destroys structure. One impulsive move often leads to another. A trader makes a quick entry, the market moves against him, and rather than accepting the mistake, he reacts again, doubling down, averaging in, or chasing another setup to make up for the loss. Soon, trading becomes emotional firefighting instead of strategic execution. The account bleeds slowly, not from lack of opportunity, but from lack of discipline. True fortune comes from consistency, and consistency cannot coexist with impulse. The greatest traders treat every decision as a test of patience. They understand that trading is not about predicting the next move, but about aligning with the right one. That alignment requires waiting. For confirmation, for strength, for timing. Impulse interrupts that process. It whispers, now or never, when in reality, the market offers infinite opportunities. Every impulsive trade assumes that this moment is special, that it must be seized immediately. The patient trader knows better. He recognizes that the market is generous, but only to those who approach it with calm observation, rather than emotional urgency. Impulse is just a trading flaw. It is a psychological trap. It feels productive, even heroic. It satisfies the craving for control in an environment that is uncontrollable. But fortune doesn't favor the one who moves first. It favors the one who moves right. The patient trader builds conviction through study and confirmation, not emotion. He lets the market show its hand before playing his. Each trade he takes is deliberate, measured, grounded in logic. He may act less often, but when he does, his moves carry weight. Resisting impulse is an act of strength. It requires awareness of one's own mind, recognizing that every moment of excitement, fear, or frustration is an invitation to act rashly. The disciplined trader feels those emotions, but does not serve them. He waits for clarity to return before deciding. That self-control is what keeps his capital intact and his judgment sharp. The impulsive trader may win occasionally, but he never lasts. The disciplined one endures, and over time, endurance turns into fortune. Because in trading as in life, it's not the one who reacts the fastest who wins, but the one who thinks the clearest when everyone else is losing control. Every great move in the market begins quietly. It doesn't announce itself with fireworks or headlines. It starts as a subtle shift, a small change in momentum, a whisper of strength, a pattern forming beneath the surface. The impatient rush to chase what they think is opportunity, but the wise know that true trends reveal themselves over time. They don't need to be hunted. They need to be recognized. Chasing a trend is like running after a departing train. Exhausting, risky, and often pointless. But standing still, studying its direction, and boarding when it pauses at your station. That's how consistency is built and fortunes are made. The market is a master of deception. It tempts traders with sudden spikes and false signals, making them believe a major move has begun. But more often than not, those who chase get trapped at the tail end of a short-lived surge. Every beginner learns this painful lesson. By the time a move looks obvious, it's already too late. The professionals, on the other hand, don't chase obviousness. They anticipate emergence. They understand that real trends develop slowly, confirming themselves through price structure, volume, and time. A trend worth trading doesn't sprint out of nowhere. It evolves, inviting those patient enough to see its shape before it's clear to everyone else. Chasing the market is an emotional decision disguised as analysis. It's born from fear, the fear of missing out. The trader sees a move and feels that if they don't jump in now, the profit will disappear forever. But the market is infinite. There will always be another move, another trend, another opportunity. What's finite is your capital and your composure. Every impulsive chase erodes both. When you act from fear, you stop analyzing. You start reacting. And reaction is the death of precision. A true trader studies the rhythm of the market. He understands that trends are not random explosions of momentum, but the result of underlying forces. Accumulation, distribution, sentiment, and liquidity. He waits for these forces to align and confirm before acting. His patience is not passivity, it's intelligence in motion. He watches the crowd rush into trades driven by excitement, then watches them rush out when volatility strikes back. And in that chaos, he finds his clarity. The beauty of a trend is that once it truly begins, it gives you time to profit from it. The strongest moves in market history lasted weeks, months, even years. They didn't vanish in a single day. The idea that one must catch the first tick of every move is an illusion created by impatience. The patient trader waits for confirmation. A breakout supported by volume, a retest that holds, a higher low that validates direction. These are signs of strength, not noise. Acting after confirmation may mean you miss the very bottom or top, but it ensures you participate in the middle, the safest and most profitable zone. Chasing trends also blinds you to the market's natural cycles. Every trend, no matter how strong, will eventually pause, reverse, or collapse. Those who chase find themselves trapped when that turn comes, holding on to positions built on excitement rather than evidence. The wise accept that missing the start of a move is not failure. Entering too late is. They know that their job is not to predict, but to respond with precision when the market shows its direction, not when it merely hints. In the end, trading is not about speed but synchronization. The goal is to move with the market, not after it. Trends reveal themselves to those who are patient enough to wait, disciplined enough to observe, and humble enough to accept that they can't force timing. Every chart tells a story, but only the calm listener hears it clearly. Those who chase noise get lost in confusion. Those who wait for the market to speak with conviction find themselves in harmony with its rhythm. And that harmony, not haste, is where profit truly lies. The market is not merely a test of strategy or analysis. It is a test of character. Every tick, every small fluctuation in price, every unexpected movement challenges your discipline, your patience, and your emotional balance. The market doesn't just measure what you know. It measures who you are. Every tick tests your temperament. It asks whether you can remain calm when your plan is under fire, whether you can stay detached when profit or loss tempts you to act against reason. The trader's greatest battle is not against the market itself, but against the constant pull of emotion that each tick provokes. When prices move in your favor, greed begins to whisper. It tells you to hold longer, to add more, to chase the feeling of being right. When prices move against you, fear takes the stage. It makes you question your setup, doubt your analysis, and abandon your plan at the worst possible moment. Each tick, no matter how small, stirs something inside you: excitement, anxiety, hope, regret. The inexperienced trader reacts to these emotions instantly, turning a strategic process into an emotional roller coaster. The professional, however, learns to stand still within the storm, letting the ticks move but refusing to let them move him. Temperament is what separates the consistent trader from the chaotic one. Two people can have the same system, the same charts, and the same tools, yet end with completely different results. The difference lies in emotional control. Markets are built to test patience and punish impulsiveness. They move just enough to make you uncomfortable, to trigger fear when you're right and greed when you're wrong. The market knows that most traders can analyze trends, but few can endure uncertainty. That endurance is what builds mastery. Every tick that challenges to strengthen your composure. Trading is a paradoxical profession. Success requires action, but survival demands restraint. Each tick tempts you to do something, to adjust your position, to close early, to switch sides. The true art of trading lies in knowing when not to act. Every tick that moves against you whispers panic, and every tick in your favor tempts overconfidence. Your temperament decides whether those whispers turn into commands. The calm trader observes the same chart as everyone else, but processes it differently. He sees fluctuations as natural noise, not as threats or confirmations. He understands that reacting emotionally to every tick is like steering a ship by the waves instead of the horizon. Temperament is built through experience, through exposure to pain and patience. The market humbles everyone eventually, and each loss or missed trade teaches something deeper about one's own psychology. You learn that survival depends not on predicting the next move, but on maintaining control during the unpredictable. The tick-by-tick battle becomes an exercise in discipline, in learning to breathe through the tension, to trust your plan, to accept that perfection is impossible. Every professional trader knows the feeling of wanting to act simply because the market is moving. Yet they resist, knowing that composure is more profitable than reaction. The constant movement of prices creates illusion, the illusion that something must always be done. But the reality is that markets often move in ways that have no meaning until they resolve over time. Each tick that tests your temperament also trains it. Over time, the trader who learns to remain steady develops an internal rhythm that is unaffected by external noise. The charts still move, but the emotions no longer do. That stability becomes the foundation of all long-term success. The greatest traders are not those who never feel fear or greed. They are those who have learned to recognize and control them. They use the market's endless ticks as training, not torment. They understand that while the market tests every participant, only those with steady temperament can keep passing the test day after day. Every tick becomes a mirror, reflecting your state of mind. If you can face that mirror without flinching, without forcing, without chasing, then you have already won. Not just in trading, but in mastery of yourself. Patience is the rarest and most valuable currency in the market. It cannot be borrowed, faked, or rushed. It must be cultivated through experience, failure. Every trader eventually discovers that patience pays twice, first in profits and then in peace. The first reward is tangible, measured in numbers, percentages, and gains. The second is silent, but deeper. The calm confidence that comes from knowing you no longer need to chase the market to succeed in it. The trader who learns patience stops fighting the noise and begins flowing with the rhythm of the market itself. In the beginning, most traders equate activity with progress. They feel the need to be constantly involved, constantly trading, constantly reacting. The idea of waiting feels like waste. But the truth is that waiting is where the real edge lies. The market does not reward those who trade the most. It rewards those who wait for clarity. Patience filters out bad trades the way discipline filters out bad habits. Every moment spent waiting for the right opportunity strengthens your control and protects your capital. In trading, restraint is not passivity. It's preparation. Profits come to those who allow time to do its work. Every strong move in the market takes time to build. Trends form gradually, setups mature, momentum aligns. And it is only those patient enough to wait for confirmation who capture the heart of the move. Impulsive traders may catch temporary excitement, but the patient capture lasting results. They understand that rushing for small wins often prevents big ones from ever arriving. A single well-timed trade, entered with patience and conviction, can outshine 100 impulsive ones. The market constantly tests whether you will act too soon, and those who fail this test end up paying the price in losses that could have been avoided by simply waiting. But patience pays in more than profits. It also pays in peace, a form of calm that money cannot buy. When you no longer feel the urge to force trades, you stop being a slave to the market. You no longer react to every tick, every rumor, every emotion that passes through the crowd. You act only when the odds are clear and your mind is composed. This mental stillness transforms trading from a frantic chase into a deliberate craft. The peace that patience brings protects you from emotional exhaustion, from the roller coaster of hope and fear that consumes most traders. A patient trader is not lazy. He is strategic. He spends more time observing than acting, more time preparing than executing. He knows that the best trades are not found through constant searching, but through quiet observation. Like a hunter waiting in silence, he knows that movement scares opportunity away. The impatient trader, by contrast, is always chasing shadows, reacting to noise, mistaking motion for progress, and confusing business with productivity. The patient one waits, watches, and when the market finally aligns, he acts with calm precision. His decisions are sharp because they come from stillness, not from pressure. Patience builds emotional resilience. Every time you resist the urge to act out of boredom or fear, you strengthen your discipline. Every time you wait for confirmation instead of guessing, you reinforce your confidence. Over time, this patience becomes your greatest edge. It keeps your emotions stable, your losses controlled, and your profits consistent. The peace that comes with patience is what allows you to stay in the game long enough to win it. Without peace, profits are short-lived, because emotional chaos will always take them away. The greatest traders are not those who trade the most, but those who wait the longest for the right moment. Their profits are steady, and their minds are quiet. They've learned that patience doesn't just make them better traders. It makes them freer human beings. The ability to wait without anxiety, to hold still in uncertainty, to let opportunity come instead of chasing it. That is mastery. And when patience finally pays, it pays not only in numbers, but in the serenity of knowing you are in control, not of the market, but of yourself.